for yet another interesting webinar on market outlook, uncertainties in global markets, investment avenues, and Gift City. I am Anis Ali, and I will be your host today. In our today's session, we will start with insights on market outlook and investment avenues, followed by a Q&A session, and concluded with a brief presentation on Gift City. So please stay tuned till the end for some interesting key takeaways and investment insights for making a more informed decision. So to speak about this subject and share his thoughts with us, we have with us today Mr. Sankar Narayan, ED and CIO at ICICI Prudential Asset Management Company, where he oversees assets of around 9.19 lakh crores. Narayan plays a pivotal role in shaping the investment strategies of the company and is a member on the Amphi Equity CIO committee. He's a market veteran with over 3.5 decades long career and has received several accolades and recognition for his contributions. So with this brief introduction, over to you, Narayan sir.
Welcome to all of you. It's a pleasure to talk to all of you in this session. And, we've seen this entire bull market start in 2013. And what happened between 2010 and 2013 was that there was a very bad period of macro where India's current account deficit was high, India's inflation was high, and that caused a lot of problems at that point of time. So what happened was from 2013-14 onwards, the government, along with the Reserve Bank of India, worked very hard to improve the Indian macro from 2013-14 and have a situation where the inflation was under control, current account deficit was under control, fiscal deficit was under control, and GDP was growing. And once we had that situation moving from that point of time, we had a very, very good situation from 2013 onwards. And because we had that situation going from 2013 onwards, we have had a situation where the entire Indian mutual fund industry has been growing from 2013 all the way till 2025. For the last 12 years, we have seen continuous growth in the Indian mutual fund industry, and we have seen money come on a continuing basis to the Indian mutual fund industry to be invested in stocks and in bonds over this entire period. And if you look at the entire situation, you will find that India is one of the few countries in this entire decade which has seen a drop in inflation. We have seen a situation where the fiscal deficit has been under control. And we have had a situation where current account deficit is under control. And today, if you look at the last 1 year, you've seen interest rates drop significantly by 1.25% by the Reserve Bank of India. The 10-year yield in India is possibly at its lowest ever in the last 15 years. And you have a situation where the entire macroeconomic situation of India is very good. What is the negative side of this whole thing has been that Indian equity valuations have been high for years. Over the last 2 years, the Indian equity valuations have been very much higher than what it used to be. And that was a problem for new investors. The old investors were very happy with the entire equity market valuations being very high. But for new investors, the Indian equity market valuations being very high was a problem. So we used to be worried what to do with that situation, and we did not have any solution except that asset allocation was what we used to tell everyone to do. And we were in fact very cautious on small and mid cap. And in the last 1 year, small caps have underperformed large caps substantially. And that call of ours had kind of played out in the last 1 year. Having said that, today what has happened at this point of time is not only India, every market in the world has become costly. There was a time Korea was cheap, there was a time Taiwan was cheap, there was a time Japan was cheap, there was a time Europe was cheap. Today, every market in the world has become costly. And today, the whole problem of valuation is not India specific, it is a global problem at this point of time. And that is the kind of situation we are in from an investor point of view. What else has changed in the last 1 year? What has happened is there has been a big artificial intelligence oriented stock boom in the entire world. And in India, we had very, very few stocks which we could consider as artificial intelligence oriented stocks. We didn't make chips, we don't make semiconductor chips, we don't make any of these products which are considered to be close to artificial intelligence because we don't have part of the semiconductor chain in India, and we don't make any of those chips which are required for artificial intelligence. We don't have any companies which have become very big in LLMs, large language models. So what happened was a lot of stocks which went up in the last 1 year were all stocks connected to the artificial intelligence, and therefore India underperformed meaningfully against every stock market in the world, whether it is Taiwan, whether it is Korea, whether it is the Nasdaq, whether it is select Chinese stocks, whether it is Japan. It underperformed all the markets of the world. Coupled with that, India, because India was a big buyer of oil from Russia, there was a problem with the India-US trade treaty, with the result that we have still not had a very favorable India-US trade treaty, which resulted in rupee depreciating to 90 rupees recently. And this has happened at a time when rupees real exchange, RER as it is called, has become very cheap. So India has become, rupee was always never a undervalued currency. But today, based on the RER framework, which is the real effective exchange rate framework, rupee has finally become undervalued. And that is very interesting for most non-resident Indians, that rupee has finally become undervalued, and rupee has underperformed against almost all the countries in the world, primarily because of the India-US trade treaty. And therefore, we have a situation for the first time, I would say, in years, we will be able to say that rupee is undervalued because rupee has underperformed against euro, against the pound, against the dollar, against all the Asian currencies. So we have a situation where the rupee has become one of the most undervalued currencies. It has, even against a currency like the Brazilian real, which always used to be the most currency which used to do badly. Rupee has done very badly against even the Brazilian real in the last 1 year. So we have a situation where Indian markets have not done well in the last 1 year against all the global markets. Indian rupee has not done well against most of the global currencies. So after a long time, we think that India has become a contrarian opportunity. And when India becomes a contrarian opportunity, and India is one of the best growth stories of the world for the next decade. Why do we think India is a growth story? Primarily because if you look at the services export, India has had one of the biggest drivers of services export in the last 10 years. After COVID, the all the companies in the world, whether it is American companies, whether it is European companies, whether it is companies based in UK, all of them realized, whether it is Canadian companies, all of them realized that lot of work can be offshored to India in services sector. So what they did was they set up what is called as global capability centers, and to actually do the work from India, because what COVID showed that a lot of work could be done out of home and not necessarily in offices. When people realized that you could do lot of work done could be done out of home, later people realized you could do a lot of work out of India instead of doing it in costly offices in many parts of the world. So a lot of the work actually got shifted to global capability centers in India, particularly in Bangalore, Hyderabad, Pune. And that has resulted in a huge boom in services exports from many, many companies, including European companies. And that has resulted in a big boom, actually. So, in earlier periods of time, as a fund manager, I've been a fund manager at ICICI for 21 years. We always used to worry about oil price. So when oil started to zoom in 21, 22 following the war, we thought that again we are going to have a problem of current account deficit. But what we realized was that because of the services export of GCCs, there is no problem of current account deficit, and current account deficit was very, very stable in India because of the services export at this point of time, which more or less covered what was needed because of higher oil prices. And if you look at what has happened to oil over the last 20 years, oil has been one of the most stable commodities. So you have a situation where in 2006 it was in 60s. In 2025 December also it is in 60s. So you have a situation that India's biggest import from 2006 to 2025 has not grown at all, which has been a very, very big benefit from Indian macro at this point of time. So you have a situation in India at this point of time where the currency has become undervalued. The Indian equity market has underperformed, but we have a situation where Indian equity market has underperformed, but it has not become cheap. But you have a situation where the entire global markets have also become costly. So, what is our view on global markets? Actually, it all depends on what will happen to the US AI stocks. Actually, we are not experts on it, but when we think about cycles, and we are used to thinking in cycles based on one of the gurus that we watch called Howard Marks. What we worry is that can the US AI stocks correct? And another guru that we watch is Warren Buffett, and he's sitting on one of the highest piles of cash ever that he has created. So, due to these two reasons, we worry that can there be a meaningful correction in US AI stocks? And that is one of the biggest risks that we worry about. In that US AI stock correction, can India be the country where there can be a big move downward? The answer is no. India has been the biggest dog on the move up because India did not participate because it did not have many companies connected to the US AI. So it will be the outperformer on the way down. Having said that, it is in the US is the world's biggest stock market. So if that were to have a meaningful correction, it should have an impact on all markets, including India. But India would be the outperformer in this case. Is there a good chance of a meaningful correction? Yes, is our view. The reason being global market cap to GDP has touched the record at this point of time. And you have a huge number of companies without earnings, which are actually trading at high valuations. And in recent times, we have had a situation where we have seen a lot of vendor financing happening in the artificial intelligence area, where you see A giving order to B, and you have a situation where A doesn't have money, so A gets money from C. All kinds of vendor financing is happening, and that normally happens in an end cycle. So, which is why one of the biggest worries we have for the market in 2026 is what happens to US AI stocks. And for that, we don't have a definitive answer. Neither can we call experts. I'm sure most of you have access to better experts than people from India at this point of time. But that is our biggest worry. Do we worry about India from a 10-year lens? The answer is no, because India has very good demographics, has very good growth story over the next 10 years. India's current account deficit is under control, inflation is under control because it is at in fact record low. India is one of the countries where the GSEC yields have been the government borrowing rates have been coming down, unlike other parts of the world. So we are in a situation where the next decade, India has a potential to deliver better growth than many other parts of the world. So we think that 10-year outlook on India looks much better. And from an NRA point of view, the currency is very attractively poised. And we believe that if a US-India trade treaty is signed, there should be a good improvement in the currency. Do I know anything about the treaty more than any of you? The answer is no. Do we at ICICI know more? Answer is no. But we also read the same newspapers and find out that next week they're coming for more trade talks. That's all we know, and that's what we share. We've been expecting that a trade treaty would get signed but it has not happened in the last 3 months. But we remain confident that in the next 3 months, at some point of time, the trade treaty would get signed, and that would have a good impact on the currency, because it is not as if there is a big problem in the current account deficit. Now, people are looking at what is happening to gold and silver. I have no idea there, but I believe that gold and silver has gone up more because of the fact that people have lesser trust in the dollar than anything else. And as most of you know, India has more than $2 trillion of gold stored with most of the people in India. So India is possibly one of the biggest gainers in this gold upward move. But it doesn't reflect, because what happens is when gold goes up, also Indians keep buying gold. And that has resulted in an increase in commodity trade deficit, although the services exports has been booming. So we believe that there is no risk to India because of gold going up, because India is the biggest, or possibly the holder of gold in the entire world, maybe in individuals, maybe the not necessarily only the central bank, but including individuals, we would be one of the biggest holders of gold. So the fact that gold has gone up so much is actually a big benefit to India. But what do we recommend investors to go invest in gold? We recommend asset allocation only, because in asset allocation framework, our framework suggests that you have to be careful in investing in any asset class at all-time high. Last year it used to be small caps, and therefore we used to be careful. This year it is actually gold and silver, where we tell people to be careful, but every day it goes up. So people are doing the same thing which people used to tell us in gold and small caps last year, that why is it going up every day? But today we don't have an answer why gold and silver is going up every day. But we tell people to be cautious in gold and silver and do only asset allocation, because every day gold and silver is going up. Maybe because of the falling trust in fiat currencies at this point of time. So overall, I would say this is a time to invest in India, because the currency is done badly. At the same time, India is not the time. It is not the time to take a very big bet in equities, because equities is not cheap at this point of time. But unfortunately, we've been saying this for the past 2 years, but Indian equities don't seem to correct. And despite FII selling, Indian equities refuse to correct, because the domestic inflows have been very strong, due to which Indian equities have not corrected. I do not know what will cause a correction, but Indian equities on an allocation basis, on a valuation basis, have not turned out to be cheap. Because Indian equities are not cheap, what has happened is that there have been huge fundraising by many corporates in India. And this includes foreign multinationals wanting to list in India. It includes private equities selling in India. They don't get exit in any other country. It includes many old promoters wanting to list their companies in India. It includes old promoters wanting to sell some stakes and reduce their promoter holdings. This has resulted in huge primary market activity, and that has actually kept a cap on the amount of rally that India has seen. And that has been a positive actually. Otherwise, Indian markets would have shot up substantially, and India would have had an even more overvalued market. Luckily, it doesn't appear that this flows will stop anytime soon, because when we look at the amount of IPO pipeline which is there for the next 6 months, there seems to be enough IPOs even now available to be invested in, and that will keep a cap on the market. And that is why we are not big believers in a mega return in equities at this point of time. We are only believer in moderate return in equities, because of the fact that there is huge supply from various kinds of private equities, from multinationals wanting to list in India, some of the Indian promoters wanting to list their companies, etc. Is this a healthy development? It is a healthy development, but keeps a cap on the amount of rally that Indian equity markets can. Over the years, I would say India has created a very good capital market ecosystem. And that is one of the reasons why we have been able to see so much of IPO raisings, etc. at this point of time. So overall, I would say we are in a very interesting period. Uh, at the same time, what will happen to US AI stocks should be the most important development of 2026. What will happen to the India-US trade treaty would be the other thing which we in India are very focused on. because every day we wake up in the morning to see whether anything has moved forward on it, and we feel upset that nothing much has moved in the last few months. But we remain confident that in the next 3 months something will happen, and that should certainly change sentiment on rupee and on various things at this point of time. Overall, the big advantage that has happened in the last 20 years is the amount of jobs that have got created in GCCs, in the services sector, in manufacturing. Also, jobs are getting created, but in manufacturing, we have huge competition with so many other countries. In services, we have very limited competition because India has managed to create an ecosystem which no other country has at scale. So I think in services, we are actually on our own. But in manufacturing, we have got numerous other countries competing with us. So when we want to do manufacturing, we find that we have other countries competing with us, whereas in services we have our own challenges. This is where we are. So you have an undervalued currency, which I believe an NRA is much better positioned to use at this point of time. And I would request Anis to take up whether there are any questions that he may have for us from many people. And I would be happy to thank you for the opportunity, ICICI Bank, to talk to all of you. Thank you.
Thank you, sir, for this insightful presentation. I'm sure that this information provides numerous opportunities for the NRIs to gain a comprehensive understanding of India's economic growth. Now, we'll quickly move to our Q&A session, where we have a couple of questions from our customers who've joined us today. We'll try and cover, the most common ones. So, the first question for you, sir, is how do you see global macro uncertainties such as geopolitical tensions, inflation trends, and interest rate movement shaping the markets?
Over the last 3 years, we've been worried about it, and what it has resulted in is that it has resulted in a situation where the markets have been volatile in some parts of the world. But overall, if you look at it, markets are at record levels in most parts of the world. So you look at Japan, it is at all-time high. If you look at US, it's at all-time high. If you look at Taiwan, as Korea, it's at all-time high. You know, the irony at this point of time is that despite all the geopolitical developments, people have an extraordinary amount of trust in equities as an asset class. And equity valuations are not low. And because of what has happened from 2020 till now, people are reluctant to book profits. And
True.
this is the situation. So I would say that despite geopolitical tensions, I would say that the risks are not getting priced in. And in many other parts of the world, given that interest rates have gone up, there is a case for asset allocation in all parts of the world because unlike the 2010 to 20 phase, where whenever we have used the word asset allocation, where people used to say, how can I invest in debt when it gives me zero interest rates? Now, no longer it is zero interest rate in any part of the world. So we believe that investors should practice asset allocation in every part of the world and have a meaningful position in debt as well, because end of the day, debt is also yielding returns. Even in a country like Japan now, the 10-year bond and the 30-year bond is giving you meaningful interest rates. So I think it is
Correct.
important to invest in debt and in equity and not just in equity at all-time high.
Got it. Got it. Perfect. So the next question is in the current environment, which sector in India appear to be best positioned to outperform, and which ones should investors be more cautious about?
See, we have been careful in new age sectors. Some of the new age sectors don't have earnings, and we believe that we cannot have very big positions in those new age sectors because if those profits don't come in the next 3 years, they have meaningful scope to actually correct. And we have been careful in areas like, uh, where the manufacturing competition is too high And we worry whether those companies will actually manage to compete with the Chinese and the Taiwanese companies and the Vietnamese companies. Because what happens in manufacturing is that you have too much competition. So we see very high valuation stocks. We worry whether those implied valuations can be justified or not. On the other hand, we have been more positive on consumption-oriented companies because in the last 1 year, there were three positive developments India did. Despite that, the market did not go up. One was interest rates came down by 1.25%. Second was they gave a big income tax stimulus in February where people below 1.5 million income, they got a huge tax benefit. And third was there was a big drop in GST rates in September. So we are focused on many of the consumption-oriented stocks which have not done well because we believe that in 2026 consumption should do reasonably well. Having said that, nothing in India is dirt cheap that you're going to be able to make mega money.
True.
That we have to point.
Absolutely. Sure. Sure, sir. So the next question is for NRIs and Indian investors sitting on surplus liquidity, what would be the most suitable investment avenues today? Would it be mutual funds, direct equity, fixed income products, gold and silver ETFs? And what would Gift City be an option to explore?
I think Gift City is a very, very interesting option to explore. I think there is a presentation after this which Mr.
Yes.
Tanish is going to give. I think it is one of the most interesting areas to explore. And clearly, as I mentioned, rupee is undervalued today. And in the last 10 years, we would have never said that. So I would say that anything which involves investing in rupee at this point of time is something which is interesting, which means that fixed income, NRE deposits, these all are very, very interesting areas to invest in. Mutual fund, obviously, we are big believers in asset allocation. So any of the hybrid funds are interesting. Obviously, we are interesting. I'm not supposed to talk on any product today. So they are very interesting at this point of time. Gold and silver, as I mentioned, I'm not comfortable with anything which goes up every day, every hour. I'm not comfortable recommending anything like that. So other than as a part of an asset allocation, if you want to take a small position, I'm comfortable. Otherwise, I'm not comfortable recommending everything which has done too well in the last 1 year. It doesn't form part of the investment framework that we at ICICI Prudential follow.
Okay. Okay. But yes, like you just mentioned, it can be a part of your asset allocation to keep yourself diversified.
Exactly.
True. So the next question is, what key indicators should investors track regularly to understand the shifts in the global and Indian markets?
A very tough question for which there's no easy answer. I'm saying that there are too many indicators, but you have to watch what is happening to, whether competitiveness of a country is improving. So for that, I would certainly say current account deficit is something which is very much important. If any country in the past, what we have seen is if in any country current account deficit keeps on deteriorating, we worry about that country. And in any country where the current account deficit or it becomes a current account surplus, we normally are positive. And if we definitely look at wherever the countries have done very badly in asset markets, but current account is comfortable, we are normally very comfortable. So if I had to use one indicator, I would use an indicator which no one would talk about, which is current account deficit.
Interesting. So current account would be one, and anything else that you would want us to kind of focus on?
People use, in one of the frameworks that we at ICICI Prudential use, if anything has given 10 years of no return, normally I'm very positive. Not a stock, but an asset class. And if anything has given too much return, then we are normally careful. So today Nasdaq has given too much return, so we are very careful. So,
Got it.
in 2012, we used to be very positive on US because 12 years of no return in US made us very positive. So whenever there is one decade of no return in any asset
Mhm.
class, you have to be very positive. One of the reasons for being a bit more cautious on gold and silver is because it's given too much return.
Correct. 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 Interesting. So we'll take one last question, sir, with you. And so this question is, looks like the markets are overvalued across the globe, especially the Indian markets reaching an all-time high. When can we expect a correction of about 20 to 30%, using that as an opportunity to enter back into it? And is it the AI bubble that will cause this correction? And is the Indian market immune to the AI bubble?
Actually, I think India is less overvalued than 1 year back. 1 year back, the Indian small caps were very worrying. Actually, after the meaningful underperformance of Indian small caps, we feel more comfortable. Actually, it's tough to call for a 20 to 30% correction in India. Uh,
Mhm.
can the US AI stocks correct by 20 to 30% is the question that I would want to ask the people who understand US AI stocks. And that is the biggest area of worry. But even in that situation, I believe that India will correct much lesser. But I would believe that a 20 to 30% correction in India looks less likely. Stocks in US AI alone, not the entire market, correcting 20 to 30% is a possibility. And that
Mhm.
is the biggest worry I have at this point of time for entire global markets. And
Okay.
that is what I believe that investors should look for, whether it can happen, not happen. But I would say we at ICICI Prudential are not the most knowledgeable in that area.
All right. Great. Naren sir, thank you once again for
Thank you.
sharing your thoughts and insights with us. It was really interesting talking to you. Thank you
Thank you
once
for the
again.
opportunity. Thank you for the opportunity.
Thank you.
Thank you.
So now I will invite Tanishq from our Gift City team, and I will request Tanishq to kind of give us a brief understanding on the features and benefits of Gift City. So over to you, Tanishq.
Yeah, thank you, Anis. Thanks for the introduction. So, hi, good afternoon, everyone. Thanks for joining across the world. So, today I shall be covering a very brief introduction regarding Gift City and what all is there for NRIs in and around Gift City for the personal banking space. Now, talking about Gift City, GIFT basically stands for Gujarat International Finance Tech City. So, this is the abbreviation. So in Gift City itself, it is spread across two major zones. So first is a DTA, which is deferred trading zone, domestic trading zone, and the second is special economic zone. So all over 30 to 35 banks are located in this special economic zone. Now, what exactly makes this Gift City a special economic zone? There are three primary benefits. First, only foreign currency is traded in Gift City. Second, FEMA does not apply in Gift City. Third, any corporate entity looking to set up their business in this special economic zone, they get a tax exemption of 10-year holiday, you can say, in the initial 15 years of their setup. Now it is developed by the government of Gujarat and which is supported by the government of India. Unlike India, where we have different regulators for different sectors. For insurance, we have a different regulator. For securities market, we have a different regulator. Here in Gift City, we have our own regulator. We don't come under the purview of RBI. The regulator is named IFSCA, which stands for International Financial Service Center Authority. So it possesses the powers of all the sectors that are there in India together. So it is a one-stop unified regulator for us to resolve all the queries. Now the purpose of Gift City basically is to onshore the offshore financial activity that is happening overseas. The major purpose is that, and the key objective is to drive business from overseas. Now, Talking about the Gift City ecosystem. So corporate banking, capital markets, trade finance, custody ecosystem, global markets, and personal banking, which is NRI banking. So that this incorporates the entire Gift City ecosystem here, which is there with the ICICI Bank. Now, talking about, I would be briefly covering the personal banking ecosystem today. So, for NRIs, ICICI possesses as a one-stop shop stop solution for all the NRIs out there. So, if the requirement for an NRI is in INR, then we have NRE plus NRE savings account and NRE FD for you. If it is a long-term requirement, then you NRIs can go for all fixed deposit, and if they want to keep the funds liquid, they can park it in the savings account. Now herein I would be covering where Gift City comes into the picture and which can assist the NRIs to earn better interest rates than their overseas bank. Now if the requirement is in foreign currency itself, then Gift City or FCNR option is there with ICICI Bank. Gift City first main proposition is a foreign currency savings account. It is called Global Savings Account for NRIs, which is available in 8 major currencies: USD, GBP, Euro, CAD, AED, AUD, SGD, HKD. So all the currencies are interest bearing, and the interest rate offered on these currencies itself is at par or competitive than the overseas banks. Now, this is only available for NRIs or any OCIs or PIOs. Here, the key feature which is more acceptable across Middle East because of the presence of Sharia law is a nomination facility. Because nomination facility becomes a key differentiator whenever it comes to Middle East because of the presence of Sharia law. Herein, we provide the nomination facility to all the account holders. Now coming on to the short-term deposits. Here in Gift City, you can create the fixed deposit starting from as little as 7 days, and it can stretch up to 39 months. So only in foreign currencies, the 8 currencies that I mentioned, you can create a fixed deposit starting from 7 months, 7 days, stretching up to 39 months. There is a partial withdrawal or a premature withdrawal facility also available with us, which comes with a penal charge of only 0.5%. Here, in term deposits, if you are looking for a solution for over and above 12 months, there is an FCNR option also available in ICICI India that can also be opted. The third facility which is there in Gift City, it is loan against deposit. So this loan against deposit is available for only existing ICICI NRIs. So this comes in 4 major currencies: USD, GBP, Euro, and CAD. This can be availed against 3 scenarios. First, if you are holding an FD, NRE FD, which would be predominantly in INR. So against INR also, any NRI can obtain a foreign loan in foreign currency itself. Second scenario would be if you have put a deposit in FCNR, against that also, out of the any of the 4 currencies, we can disburse the loan to you. The third, if the funds are being placed in Gift City deposit as well, we can provide a loan in any of the 4 currencies to you against that Gift City deposit itself. Now, 2 key points to remember: it is a term loan and we follow the bullet repayment method. So there is no equated monthly installments or EMIs that you need to pay. The only amount that you need to pay is at the time of maturity, both principal and interest. So the 3 key proposition, it's the plain vanilla product in Gift City: savings account, term deposits, which is the fixed deposit, and third is a loan against deposit option, which is available for all the NRIs. Now, why ICICI Bank IBU Gift City? First, we have a different regulator. We have already talked. Just a recap: there is ease of access, that one point of contact from the Gift City team, and there is a same time zone benefit that NRIs can enjoy. This Gift City account comes with a fully accessible 24/7 internet banking, which would be separate internet banking from ICICI India, and the customers or all the NRIs can transfer or create a fixed deposit online itself. So any NRI looking to park some liquid funds, or if they have any short term requirement, they can put the funds here, park it here, earn an attractive interest rate, and whenever there is a need, they can transfer seamlessly through a swift mode of transfer. So in Gift City is basically located in Gujarat. The details are provided on the screen, and as well as the website link. It is giftcity.icsabank.com. In case of any queries, you can reach out to us at contact@giftcityicsabank.com. And this is uh, this is the only part for me, Anish.
Thanks, Tanishq, for sharing this information with us. So before we take just a couple of questions around this topic, I will request the viewers to share your valuable feedback on the link shown on your screens. So Tanishq, we have just a couple of questions for you. And I guess the most common question that people usually would be asking is, what are the charges for opening a Gift City account, or what is the account balance that they would have to maintain? And those basic details is what people would want to know.
Right. So this Gift City account does not comes with a minimum balance requirement. You can deposit any funds. It starts from as little as $1 itself, or in one equivalent foreign currency. There is no monthly or minimum account balance to be maintained, or any annual maintenance fee. So this is completely free. So the only charge involved with this Gift City account would come when you do an outward remittance, and that is also the lowest among all the banks. It is 10 flat foreign currency units per transaction, irrespective of the amount.
Okay, interesting. And what is the easiest process or method of opening a Gift City account?
Yeah, so if you are an existing customer already holding an NRE account, then you can open the account through your internet banking itself. It's a simple 5-minute hassle-free journey, and the account shall be opened within 5 minutes. And if you are new to the bank, you don't bank with ICICI, you can reach out to any of your nearest branches, and they shall assist you with opening the Gift City account.
Perfect. Perfect. Thanks, Tanish. This was quite insightful and helpful. So with this, we now come to an end. Thank you all for being part of today's discussion and giving your valuable time to us. We hope you found the insights valuable and thought-provoking. We look forward to connecting with you again in our upcoming sessions. Until then, please take care, stay safe, and bank on us. Thank you.